When it comes to DSCR loans, I am amazed by some of the myths that I see online. As far as I can see, the widespread inaccurate information is because the people putting out these videos on DSCR loans are basing their facts on the one DSCR product that their own firm offers, or the one DSCR product that they've come across from one specific lender. At the end of the day, unlike conventional mortgages, DSCR loan rules and guidelines vary from lender to lender. There is no one-size-fits-all product or process for these loans, and too many people have not educated themselves on what else is out there in the market. But with all this information online, how are you to know how these loans work, how to broker them, and how to qualify for them? Okay, so let's talk about some DSCR myths and the truth behind them. Okay, so the first myth, and one of the biggest ones, is seasoning. Seasoning is how long you've owned a property when you try to do a refinance. Too many investors and brokers out there think that there is a set required amount of time that you must have owned a property before you can use a DSCR loan to do a refinance, like there is with conventional mortgages. And most people think that that time is 6 months. This is just categorically false. Each lender will have a different seasoning period requirement. Absolutely, some will say 6 months. Some will even say 12 months, but others will allow only even 3 months. Some maybe even 1 month. And breaking that down even further, some lenders will actually have different rules depending on whether it is a rate and term refinance or a cash out refinance. So no, the seasoning rules are not always 6 months. They vary. Okay, so next up is DSCR calculations. I have heard several different myths when it comes to this one. It is not true that you can only use 90% of the actual or market rent for the DSCR calculation. Some lenders will use 100% of it. Some will even use 110% of the market rent. It is also not true that the DSCR itself must be above 1.25 or 1.2 or 1.1 or whatever number that you've heard. What is true is that different lenders will have different requirements for the minimum DSCR. Some will even go down to 0, so they don't actually have any minimum DSCR requirement, and the loan will be based entirely on the value of the property. Another myth is that pricing is influenced by experience. Now, while this may be true for hard money loans, with DSCR loans, experience is not always a factor. In fact, most of the time, it makes absolutely no difference at all to the terms of the loan. A DSCR loan is fully collateralized by the asset itself, so experience usually has little to no impact on the terms of the loan, meaning that you can go from having no properties at all to owning a portfolio without having to justify your experience each time you go for the loan. Another common DSCR myth is that the interest rate will be different if the borrower is putting the property and the loan in the name of an individual or the name of an entity. Contrary to popular belief, whether the loan is in the name of an entity or an individual, it does not always mean that there's going to be a difference in rates and terms. Interest rates are generally based on credit scores, loan to values, and the DSCR ratio. For the vast majority of lenders in this space, whose name the loan is in is irrelevant to the terms. Okay, next up is minimum loan amounts. A very popular video on YouTube from a mortgage broker states that the minimum loan amount for a DSCR is $75,000. Now that could be true for them. Again, just like with the other variables we've touched on, this is different from lender to lender. Some will absolutely say 75,000. Others will say 100,000 or even 150,000. Some will actually say 50,000. A DSCR loan is not a one-size-fits-all product, and if a broker ever gives you a blanket answer, run. Okay, let's talk about reserves. Reserves are not always required, and if they are, it's a different number of months of reserves that are required by each lender. Some lenders need to see 3 months, some 6 months, some 9 months. Some don't need to see any at all. And even within that, it can also vary for any given lender, depending on whether the loan is for a purchase, a rate and term refi, or a cash out refi. And again, even within that, it depends on whether that particular lender allows cash out funds to cover reserves. You might be starting to see a theme here, which is that terms vary from lender to lender and from situation to situation. The next myth we're going to talk about is required documents. I hear all the time that all DSCR lenders require 2 months of asset statements, like bank statements and stock accounts, so that they can see that you have the required money for your down payment and your closing costs. or so that they can see that you're not borrowing that money from elsewhere. Well, guess what? Not true. Yes, absolutely. Some lenders do have this requirement, but not all of them. Some lenders both source and season funds. Some lenders source funds but don't season funds, and some don't do any at all. They don't even care if you deposit a bag of cash in your bank account the day before you close your loan. And the last myth that we're going to talk about today is vacancy. I hear experts say all the time that you can't get a DSCR loan refinance if the property is vacant. A lot of the time, whether a property is vacant or not is actually irrelevant, and the underwriting of the loan will be based on the market rent on the appraisal, even if there's no lease in place. And this is actually quite common. Most DSCR lenders do allow vacancy as opposed to don't. As you can see, it is each lender's rules and guidelines, and not one set of rules and guidelines, that makes a huge difference in whether a borrower can qualify for a DSCR loan. This is why it's really, really important to know these products inside and out, and to really understand each lender's specific rules and guidelines. And remember, always be transparent throughout the process. Provide exceptional service to your clients, and be a flexible broker with the options and solutions that your investors are looking for. This is what I practice myself and what I teach every broker that I work with. If you're looking to become the best of the best and never get caught out giving your clients inaccurate information, I invite you to check out my DSCR and Hard Money Loan Broker program. I'll link that for you below. And I'd love to hear about any crazy DSCR myths that I haven't covered. Leave them in the comments below and let's chat about it.